Welcome to the 2020 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you so much for joining me on this November 4th, 2020, the day after the major presidential elections in the United States of America. And officially, no winner has been declared. But regardless of who gets in office, I pray everyone is doing well. Regardless of who gets in office or who stays in office, this economy is continuing to slide down. Main Street is continuing to be in depression-like numbers, while Wall Street continues to surge ahead. As a matter of fact, the Dow Jones today jumps 500 points amid this tight election race. Tech rally pushes NASDAQ up nearly 4%. I was watching stocks earlier today around lunchtime, my lunch break, and the stocks were surging. I mean, just anticipating this stimulus package that is supposed to be coming next year, first quarter of next year. Regardless of who gets in office, they're going to have to pass another $1 trillion or more massive stimulus to help bolster the economy. But we know that things are running out. The patient is no longer responding to the drugs. There's only so much epi you can give a patient, only so much adrenaline and steroids you can give a patient before it's just the point of diminishing returns. And this is exactly what we're seeing with the stock market. This is the bubble before the storm, ladies and gentlemen. So the Dow Jones is up 500 points today. NASDAQ is up. Everybody appears happy, but there is so much uncertainty, and you can feel it in the air. I can feel it in the air, and you can feel a change is coming, and that change is almost here on the precipice of coming. Private payroll growth slows in October. This is according to CNBC.com today, well below expectations. Companies added 365,000 positions for the month, according to ADP, which is a payroll processing service, well below the 600,000 estimate from a Dow Jones economist survey. So many out there searching for jobs. Maybe you're on your laptop right now looking for extra work, side hustles, or you're also looking for preparation supplies to get ready for shortages and what's coming ahead. But that's less than half of the positions for the month. They only added 365,000 positions out of the 600,000 that was estimated that was supposed to come. So this is also much lower than the 753,000 jobs from September and the lowest since July. Service-related businesses were responsible for almost all the gains, with hospitality leading. And this is just a byproduct of, our president saying to open back up. The last few months we had kind of like a halfway open, or a quarter of the businesses open. Still ghost towns in many of the cities around the U.S. I'm sure you've seen that too. But, for the sake of argument, from a sector perspective, services accounted for almost all the job creation, with 348,000. Now, the retail, hospitality, service sector, travel sector, tourism sector, the U.S. is based on a service economy, but technically these jobs don't pay a livable wage. There's very few, actually, to be honest with you, there's very few white-collar jobs, quote-unquote, that pay a livable wage in today's consumer inflationary economy that we're in. So we're looking at a situation where job growth is stagnated. The stock market is on fire because it's all speculation. They're looking for more stimulus. We have this election. We have this pandemic that's growing at leaps and bounds. Matter of fact, they had 82,000 new cases this week in one day. So regardless of whether you believe the pandemic is a hoax or it's real, people are dying. We have over 250,000 deaths. Continue to be vigilant. Continue to wear your mask. Continue to get supplies like mask, gloves, medicine, things while you can now, because things are going to get much, much worse in the first quarter of 2021. Once people realize that the stimulus is wearing off and that it's no longer going to make a difference in the daily lives of Main Street. As a matter of fact, CNNBusiness.com reported, I'm pretty sure many of you saw this, 2 major mall owners filed for bankruptcy. Did you know CBL Properties, one of the big mall owners of a lot of malls around here, and Preet, they filed for Chapter 11 bankruptcy on this Sunday. And, they both will continuing to operate while they navigate this restructuring process. But these two owners own 130 or so malls across the U.S., and now they're filing for bankruptcy. CBL stated that its bankruptcy filing has assets and estimated liabilities between $1 billion and $10 billion. The company is based in Tennessee. They said in August that uncollected rents from retailers, declining customer traffic, and mounting debt of $1 billion were the factors in the decision for file for bankruptcy. It owns around 100 malls, predominantly in the U.S. Southeast and Midwest. For Preet, this is a Pennsylvania-based company. They they had a prepackaged financial plan that ensures $150 million in funding to recapitalize the businesses and extend the company's debt maturity schedule. So ladies and gentlemen, I just want to ask you a question here. We have retail not coming back for years, even after this election. We have the travel industry not coming back for years. We have consumer spending not coming back for years. The only bright spot that we have in this economy is this so-called stock market surge. And so how are people going to live when the jobs are stagnated, when the economy is stagnated and everything is going on? Now, many people point to universal basic income as a solution. Possibly, but there's no way the government can afford that because they already spent money on these coronavirus packages. Unemployment rate is still around 8%. So this is just unbelievable. Economists worry that job creation could slow amid the rise in cases that they've seen to bring the pandemic total to 9.3 million. More than 224,000 Americans have already died. So the only thing that's going to get us out of this hole is going to have to be a financial reset of the whole capitalism system. And many people have been suggesting that we're going digital. And, I agree with that to a certain extent. But it's going to be a combination of going digital and the combination of switching this from a capitalist to more of a socialism type of economy, if I can call it that. It'll be like a hybrid type economy, not straight socialism, but it'll be something like that. Because, we're Americans and we have to do things a little bit different than the rest of the world. So it'll be something like that. But just to get you a heads up, this is what we're coming to, and the only way to reset this economy is that every sector is either going to have to let these small businesses fail, what they're doing now, because more than 60% of small businesses are not coming back, even after the pandemic ends, which we know we're probably about another year and a half away from this pandemic ending because they haven't got the so-called vaccine ready for us to take, which I don't recommend you guys taking. But if you feel so inclined, if they pay you $1 million and take it and you want to be a guinea pig, go ahead. But I wouldn't recommend that. But anyway, I'm not a doctor, so I don't take anything I say serious. But this is just what I feel, my opinion. But guys, this is something that we're gonna have to understand, that this is gonna be the new normal. Everybody you talk to on the street says, I can't wait till we get back to the normal. We're not going back to the normal. This is the new normal, and unfortunately, it's gonna get a lot worse before it gets a lot better. So continue to pay down your debts. Continue to be vigilant when you're walking around in the streets and in these neighborhoods and parks, because people are going to be looking at opportunity for crime, petty crimes. All that's going to go up, and it's not necessarily but people are frustrated. It's not necessarily that they're just looking for someone. They could be looking for someone, vulnerable woman or kids or man or whatever. But it's that people are frustrated because there's no help coming. The cavalry is not coming to save them, and once they realize that the government and other people are not coming to save them in terms of financially, fiscally, and they're only bailing out the fat cats in the top 1%, then that's when things are going to break loose completely with the American economy and socially with the American economy as well. So continue to stay prayed up, continue to be vigilant as well. Now, the media is painting the picture that GDP grew at 33% in the third quarter, but this is after a second quarter that we had a pandemic when everything was shut down, the worst ever quarter in American history since 1929, where we had a 40% drop in GDP. So these numbers are fudged. They are fake at best, as our president says, it's fake news, because, we had in second quarter 2020, we dropped negative 31.4% GDP. Then in third quarter, all of a sudden, we jumped up to 33.1% positive. So we basically just flatlined. We basically got back to where we started. That's all it is. But they're painting it as if this U.S. economy grew so much. And it just has not been the case, ladies and gentlemen. And we're here to tell you, to preach to you the 100% truth with this economy. Now, another thing to look out for too is since the trade deal with China fell through, like I said, there's going to be a supply shortage. And so if there's any supplies you need to get in the first quarter of 2021, you want to get that. And I'm talking about anything you need to be self-sustainable. Gardening seeds, tools, car auto parts, household goods, and food, water, medicine, things, antibiotics, things of that nature, tourniquets, durable winter clothes, hiking. You probably, many of you guys probably have this, but hiking boots, durable cargo pants, paracord, all of that, batteries, solar powered weather radios, so you can stay abreast of things if we get blackouts and brownouts next year because of disasters or because of just the way the economy is. Think about these things now, because after the first and second quarter of 2021, you're not going to be able to get these items. They're going to be either out of stock or the manufacturer is going to cut back on supply, because over 75% of things you see in the store in any store, whether it's Target, Kohl's, Walmart, Sam's, is coming from overseas, China, India, Japan, Thailand, Seoul, Mexico, wherever. And so they're going to stop supplying the U.S. with a lot of this stuff until the U.S. pays its bills. Because the U.S. is insolvent, they won't be able to make they're only paying the interest on this debt now. They won't be able to make their payments with the trade deficit and everything else that's going on. So get your supplies. Stay encouraged. I know it's hard to stay and continue to be just paying bills and seeing all your money go to bills and supplies and different things and family. But, stay encouraged. There is some hope. The good news is we're still here. We're still making a difference between each other and between our families and friends and loved ones. And we still can invest and save money in a smart way and not in a dumb way by investing it in companies and things that we know are not going to return a profit, especially in this type of economy where the whole world economy is going into a depression. But the U.S. is going to feel it even more because they have overspent their credit cards, they've overspent everything, the whole nation. And this is what we have to look forward to. So, be prepared, stay blessed, and I'll talk to you very soon. Make sure you hit that subscribe button, tell your friends to listen, and get prepared as well. And I will prepare, and I will see you tomorrow. Thanks for listening. Take care now.